Well, hi. Today I've got some actual real life examples of policies that I delivered yesterday that are Medicare supplement policies of people that made some very wise decisions, decided to take some action, and save quite a bit of money. Obviously, I can't share the personal information, but what I can share with you is some of the information, and I've jotted some of it down that's relevant here to the point. And that is, first of all, one of the clients was an 87-year-old male. He was paying $293 a month for his Medicare supplement plan. And what's one last thing about these examples is they all decided to follow the same strategy. In each case, they all had a Plan F, which if you're familiar with that, a Plan F is the one that pays for everything that Medicare approves, but covers all the copays and deductibles, so you're not out of pocket other than your monthly premium. So they all had a Plan F, and this is what they were paying. They all decided to go with a Plan G in this particular situation. A Plan G does everything the Plan F does with one exception, and that is it does not pay for the Part B deductible, which this year is $147. Okay, so they all three of them opted to go with the same strategy, go from Plan F to a Plan G. Okay, and it had been a while since any of them had shopped their insurance. Okay, now then, for client number one, 87-year-old male, his new premium for the Plan G was $215 per month. Okay. So if you deduct the difference, that's a difference of $78 per month difference in his premium. And if you multiply that times 12 months, that's a $936 per year reduction in his premium. But remember, he's got to pay that Medicare Part B deductible, that $147. So let's take that from that, find out what his net savings is. Well, that's $789 per year net savings after paying his Part B deductible. Okay. Now remember, $147, that can change from year to year, but that's what it's been the last 2 years. It may change a few dollars for next year, but for right now, that's his net savings after that. Okay. Client number two is an 80-year-old lady. She was paying $240 per month for her Plan F. We found her a Plan G for $163 per month. So that's a net savings of $77 per month for her. Okay? Multiply that out, that's $924 difference per year. Once again, we're factoring in that $147 Part B deductible. And these are a net annual savings of $777 for the year. Okay? Client number three was a 74-year-old male. He was paying $172 for his Plan F. He decided to go with the Plan G of $136 per month. So that was a savings of $36 per month for him, or a total of premium of savings of $432 per year. And again, if we add that $147 back into it, it's still a net savings of $285 per year for him. Okay? So as you can see, this can make a big difference. First of all, you got to be proactive. First of all, you got to stay on top of it. And secondly, is you've got to be open-minded enough to decide, okay, am I going to just stick with my plan, or am I willing to look at other alternatives that can provide me a net savings? In this case, all three of these people were very open-minded, and you can see how it benefits them. Okay, now is Plan G always going to be the best plan for somebody? Maybe not. A lot of times it just depends on what your objectives are. But in this particular case, this is what they decided to do. Now here's the other point of this that I want to stress as well. You know, you might have heard me say in one of my other videos that insurance companies like for you to be negligent. That's just a personal belief based on what I've observed. I may be wrong about that, but just look. But here's one of the reasons why I seem to think that. If you look at what the annual premiums are that they're paying by, in these two cases particularly, they haven't followed up every 3 years like I suggest. They've gone quite a while without checking, and now as you can see, that had accumulated quite a bit. Now this guy hadn't gone near as long as they had without staying on top of it, so his difference wasn't as big. He's truing it up. But even truing it up as often as he did, he still found a lot of net savings. So by people not staying on top of this, and in this case, it would just continue to get worse. As you can see, that's $2,292 of total premium that's not going to insurance companies that would have continued to go to insurance companies and been increasing from year to year. And that's just on 3 people. Now, can you imagine with all the thousands and thousands of people that don't pay much attention to this and don't stay on top of it, how much extra premium insurance companies are raking in due to negligence, which is as many people could keep in their pockets. And so that's the part 2 of what I wanted to emphasize with this is it's very critical. Who do you want to have this money? Do you want to go to the insurance company, or do you want to stay in your own household? And this is a cumulative number, and individually. Whose household do you want to keep this money in? Insurance company or yours? Okay, so you can see, so the point is you can see how important it is to stay on top of this and the difference that can, enormous amount of difference it can make in your cash flow and your money at home. So what you're welcome to do is, if you'd like to get in touch, if you're in Texas, you'd like to get in touch with me, you can go to the link below at turning65intexas.net, or just put that into your browser. There'll be a link on that page that that'll take you to a very simple form you can fill out. It gives me the permission to get back in touch with you, and we can work on your situation. Also, on that page, there's going to be a webinar that you can view that'll be very helpful in providing some good overall basic understanding of how Medicare works. So either way, either click the button below or put in turning65intexas.net, and we'll go from there. Talk to you later. Bye.